Everybody, what's up? Good afternoon. Michael Edward here, head trader at True Trading Group. It's May 13th. Solid day. Closed out a swing trade on CODX, which is an absolute monster. Stocks trading up around $24 last time I checked. Entered that trade at $14.70 a week ago. But today, this video is all about trading volatility. If you are a member of my channel, you've been following my channel for a while now, you know that I thrive in high volatile environments. In 2008, when we had the market crash in 2008, that was when I won Trader of the Year award at the hedge fund that I was working at. I love these environments. March, if you follow my channel and you've been watching my videos since the crash in March, you know we had a huge month in the month of March by trading the TVIX and by trading SPY options. I have left the TVIX alone over the last month and a half or so because volatility had really slowed down. But volatility is back. Now we have just had two consecutive wide range sell-off days in the SPY after trading in very tight ranges for the last month. If you guys caught my live stream last night, I specifically talked about upcoming volatility, expecting there to be some more wide range days, get ready to learn how to take advantage of that volatility, and what are the different vehicles that you can use to trade and capitalize on that type of movement. It's so crucial that you guys get an education and learn how to trade this volatility and profit from downward action. Everybody gets upset when the markets go down because you watch your 401k values decrease. You need to offset the value of your 401k decreasing by generating income by actively trading that decline and then taking a portion of that income and then adding it to your long-term portfolio at cheaper price points. That way, when the markets recover, when we're done with this crisis, you're in a better position coming out of the crisis than you were coming into the crisis. That is why it's so important for you guys to get education and learn how to trade this volatility. Okay, let's talk about my day today, and we're going to go over with you my trades on the TVIX. I had two big trades on the TVIX today. I'll take you guys to the TVIX chart. This thing is back. Okay, look at the range on the TVIX from 167 all the way to 220. That's what I'm talking about. I traded the TVIX during this entire move in the month of March. I didn't hold through this entire move. I was actively trading the TVIX basically almost every other day during that move. Now, okay, I left the TVIX alone during all of this. All right, I left the TVIX alone, and now you can see the TVIX is coming back to life with two wide range candles, two big strong increases in trading volume, meaning traders are flocking back to volatility. I take you guys to the SPY. Let's talk about what is the TVIX, okay? What is the TVIX? Maybe we should talk about that first, okay? Because a lot of people don't really understand what the TVIX actually even is. The TVIX is a leveraged ETF that tracks the VIX. The VIX measures volatility in the marketplace, okay? The VIX will measure fear, uncertainty, and volatility. When markets are crashing, there's fear, obviously, in the market. There's uncertainty, and markets will have wide range moves. Wide range moves, that's volatility, okay? When you have real tight range candles like this, that's low volatility. When you have large range candles like this, that's high volatility. And you can see over the last month, we've had tight range candles, low levels of volatility. But then the last 2 days, you can see we're starting to open back up again. Trading ranges are starting to open back up. We're getting selling pressure now to the downside. And that's providing us with good opportunities to trade volatility. There's several ways you can trade volatility. You can trade options on the VIX itself, or you can trade an ETF that tracks the VIX, like the TVIX. You also have UVXY. Okay, there are multiple ways that you can trade. Okay, here's the TVIX, and here's UVXY. Okay, these are just multiple ways that you can trade volatility. The UVXY is going to be a lot less volatile than the TVIX. The TVIX is a high flyer. It's a fast mover. It's a higher price stock. I love the TVIX because the liquidity is insane. I can get a big position, and the stock, well, the ETF can move 50, 60 points in a single day. UVXY, okay, makes the same move. It's just not as volatile. This went from 37.50 up to 47. Okay, the TVIX, like I said, went from 167 all the way to 220. Okay, but the same movement is just not leveraged. Okay, so the moves are not going to be as violent. So you can still trade the VIX through the UVXY, or if you want more volatility, you can trade the TVIX, or you can trade options in the VIX itself. Those would be the top three ways I would suggest trading that volatility. I prefer the TVIX. I thrive in the TVIX. It's one of my favorite. It actually is my single favorite thing to trade. And when it's in play, I love it. I go after it. And I'm going to be all over this thing as long as it's in play. It's important for you to understand, though, that the TVIX tracks the VIX. It's not an inverse to the overall markets. So a misconception a lot of people have is that, okay, well, if the stock market goes down, the TVIX has to go up. And if the stock market goes up, the TVIX has to come down. It's not necessarily true because the TVIX tracks the VIX. The VIX measures fear and volatility. It is very possible for the SPY to go lower, but go lower in a really slow crawl type of fade action, and the VIX actually also go down. That is actually possible because it's not an inverse. Okay, the VIX tracks volatility and fear and uncertainty in the marketplace. It does not necessarily mean that if the SPY goes down, the VIX has to go up. But when you have sharp declines to the downside in the overall markets, naturally fear goes up, volatility goes up because the markets are making wider and larger moves than they typically usually make. Okay, they always say bulls take the stairs, bears take the window. Okay, stock markets and stocks always go down a lot faster and a lot more aggressive than they do go up. It's just human nature. Bulls take the stairs, bears take the window. Okay, so that's when when stocks go up, they go up like this. When they go down like this. That's what that saying means. Okay, so the increase in volatility, this trade is back on. All right, over the last month or so, there was not really a coupled correlation between the TVIX and the SPY because volatility was much lower. Now that volatility is starting to pick up again, the trade couple is back on, meaning the correlation is back on. The TVIX and the SPY were directly correlated in the month of March when the SPY was crashing and the TVIX ran to 1,000. Okay, it was directly correlated. It then decoupled in April and then early May, and the correlation is back between the SPY and the TVIX. I noticed it yesterday. I talked about this on my live stream last night. The way the TVIX traded yesterday in the afternoon when the SPY had this sell-off in the afternoon told me that this trade was back on. The coupling was back. So coming into the day today, I said I want, to get long the TVIX again for some follow-through move. I think the markets are going to continue lower today after we saw, the heavy volume pressure and the continued selling that kicked in yesterday afternoon. So let's get to my actual trades here, guys, on the TVIX. All right, I'm going to use the SPY chart because when I trade the TVIX, I only do so when it's coupled with the SPY. That's when the TVIX will be in play. If the TVIX is not coupled with the SPY, there's no correlation, and volatility is not high, I will not trade the TVIX. I only trade the TVIX when volatility spikes. And that usually means the SPY is pulling in aggressively. Okay, so coming into the day today, I thought we were gapping down beneath yesterday's close. I thought we had more downside after the sell-off that we saw yesterday as fears start to pick back up again with economy starting to open back up. Number of cases and hospitalizations are spiking. I think Minnesota saw like 117% increase in number of cases since they opened their economy at the end of April. Okay, so LA County extending their stay-at-home order for another 3 months or 2.5 months. So like all of these things are starting to spook people again, and now the market's starting to pull back in after having its bounce off its March lows. So I thought we were going to continue lower. My first trade of the day today, I was actually early on. I took a loss on the TVIX, my very first trade. Okay, because right off the morning, we gapped down and we just dropped like a rock. Dropped like a rock. And I was like, okay, we're still very weak. Okay, I think we can get down to 279 was my target today. I will show you why 279 was my target. The low of the day today is like 278.97. I will show you later in this video why that was my target. So right off this, we drop. Okay, we drop right off the bell, and I wait for the first bounce, and then right there is where I got long the TVIX on that first bounce. So take you guys to my trade announcements on the day. Here's the log. Oh, there we go. Here's the log of the trade alerts that are called out in the chat room. I download it every day for you guys so I can show you the timestamps and everything. Here you can see I'm long TVIX at 184.10. Stop off as the SPY gets above 285.50. I wanted us to stay below 285.50 because that was the trade line and VWAP. And I said, if we can just flag here for a minute, then I'm looking for us to roll over and continue lower. Okay, so I jumped in TVIX right here. This was my stop loss because trade line and VWAP, but you can see I was early. We popped right above that trade line and VWAP, and right there I covered my, well, not covering, but I sold out of the TVIX position. Take guys here, sold out TVIX 172.24. This trade actually hurt me a little bit. I went a little too aggressive. With my entry on the TVIX when I first came out of the gate here. Maybe I got a little excited, but I lost more than I thought I was risking on the trade. I went a little too big for the size that I was going after. Okay, but nonetheless, you can see we ended up pushing higher, and then we get up to try to go green on the day. This is where another lesson comes into play. It's so crucial that you guys learn to use multiple time frames. When I'm trading during the day, I use a 4 time frame setup where I see a 3-minute, a 5-minute, a 15-minute, and a daily. It's important for you to do that because I also will sometimes look at an hourly chart and sometimes I'll look at a weekly chart. It all depends on the stock and the setup. But it's important for you to look at multiple time frame charts because sometimes you will see setups on a different time frame that you don't see in another. Okay, so what I did was I went over to a 15-minute chart, and what I start to notice is the trade line, which is the 9 EMA, this blue line on my screen, was resistance yesterday before that sell-off. Fast forward to today, it's resistance again. So I'm not going to give up on what is a good trade idea. That's another lesson to take from this video. It's something I talk about in my psychology courses on the website, is to not give up on good trade ideas. Sometimes your timing is just off. My timing was off by about an hour. I went after the trade a little too soon, but once I saw this rejection at the trade line, after proving to me that it was an area of resistance yesterday, I said, now I can enter this trade. There's my chance. And look at this rejection. Look at how heavy that rejection was, okay, off that trade line. That is such a heavy rejection. That told me there's still resistance at that trade line. Now I can look to get short the SPY by means of buying the TVIX. A lot of members in chat, some bought UVXY, some bought SPY put options, some bought VIX options. You know, there's multiple ways you can take advantage of this price action. You can either get long the TVIX, get long the UVXY, you can buy SPY puts, you can buy VIX calls. That's how you guys can take advantage of all of this action. So let me go back to a 3-minute. What I did was on this bounce back up into 285, I bought the TVIX. Again, why? Because that was the bounce back into the 15-minute trade line. Okay, there's the bounce back into that 15-minute trade line. So I'll take you guys back to my trade alerts. Oh, sorry, that's my thumbnail. Where are we? Here you guys can see. Long the TVIX at 178.29, stop loss if we get above 286.25 area, okay, which was this trade line. Okay, so right there is where I'm entering the TVIX. First take profits, low of the day. We drop down to the low of the day. I take 25% of my position off the table. Back to my alert, you can see took some profit off at 185.50. Okay, then we broke the low of the day. We extended. I took another piece of profit off the table at 191.28. And then my final take profit as we dropped lower right there, back to the alerts, you can see here, final take profit just before noon at 197.22. So almost a 20-point move, guys, a 19-point move on the TVIX off of this action on the SPY. Okay, there's the entry, first take, second take, final take. You can see we ended up extending and going a little bit lower. So just to take you guys back over to the TVIX chart, there you guys can see, here's the move that I caught on the TVIX. Okay, a 19-point move on the TVIX coming back that second time around, and that brings me back into the green. Okay, now let's talk about the afternoon trade because I went after the TVIX again. Again, we got to go back to the 15-minute chart and show you the significance of this trade line because there's the trade line coming into play again. So again, this trade line on the 15-minute chart continues to show me resistance. So on that bounce back up to the 15-minute trade line right here, I went back into the TVIX. Okay, let's go back to the 3-minute chart. My entry back on the TVIX was right there as we came back into that 15-minute trade line. Back to the alerts. Here you guys can see low on the TVIX now at 197.78. Stop loss of the SPY gets above 282.25. Okay, so I'm stopping out if we get above this level right here, which is this previous pivot high. It's also, you can see, acting as resistance here, and that also lines up with the 15-minute chart. There it is, the 15-minute trade line at 282.25. That's why that was my stop loss on the trade. Okay, then you can see we hold and then we just drift lower going into the close. I'll take you guys back to my alerts as I start to peel profits off the table. Where are we? Here we go. Took some profit off the TVIX at 205.34. Okay, 205.34 right there. Then another piece of profit off the table right there. Take you back to the alerts. Took more profit off at 209.40. And then final take profit right there. Back to the alerts. Final take profit at TVIX 215.32. So 215.32. Now I'll show you guys the TVIX chart. Here it is. So then I was able to catch that move late in the afternoon. Okay. So you guys can see here now the coupling that's back here with the TVIX and the VIX and volatility with the overall markets. This trade is back. It's my favorite coupled trade, my favorite correlation trade. And if it stays here for a long period of time, I'm going to be on top of it every single day. I'm going to be looking at the SPY and looking at the TVIX as long as that volatility remains. Okay. When I'm trading the TVIX, I base it off of the SPY. That's why I'm showing you my entry and exits are based off of the SPY's price action, not the TVIX price action. When I enter the TVIX and I say, okay, my stop loss is, I'm not buying the TVIX at 184 and saying my stop loss is 179. I'm saying I'm buying the TVIX 184. My stop loss is if the SPY gets above this area, because I'm trading the TVIX based off the SPY. Fear, volatility, uncertainty in the overall markets results in a pop in share price of the TVIX. So that's why I'm using the SPY to trade the TVIX. That's how I do it. That's how I trade it. I've had tremendous amounts of success trading the TVIX. December of 2018, I traded the TVIX. We had a big run. Obviously, throughout the China trade war news, I was trading the TVIX. And now, obviously, in the month of March with coronavirus sell-off, I'm trading the TVIX. And now here we go again, trading the TVIX again. It's my favorite thing to trade when it is in play. And folks, it is right now, for the time being at least, back in play. Guys, if you want to learn how to trade volatility like this, I have a course on our website specifically designed for volatility. The name of the course is How to Survive and Thrive During a Stock Market Crash. Talks about the TVIX, talks about the VIX, talks about UVXY, talks about options, and how to capitalize mentally and also physically from a pullback in the overall markets. If you guys are interested, for the month of May, I have a 36% discount on a 1-year all-inclusive membership to TTG. Click on the link in the description below. Use the coupon code TTG36 to get a 36% discount. And also get access to all the brand new features that are coming out, because in June, I'm launching a ton of new features on the website. So the price of a membership in June is going to go up. So if you guys are thinking about joining the TTG team, use the coupon code TTG36, get a 36% discount before prices go up in June, because we're adding a ton of new features. Okay, so that's it, guys. I also, well, let me actually just update you guys. CODX sitting here at 24. If you guys have been following my channel, I got long CODX for a swing trade right there at 1470. I got flat that position today, just over 18. I know it stings. I got flat right there on CODX. I'll take you guys to my entry, was all the way back here on the 7th. So there was my entry on the 7th. Guys, just go back and watch the video. I talk about the setup and everything. I got long at 1470. My final take up here over 18. Take you guys to my announcements. Here we are at 12:24 p.m. Swing trade update, final take profit, CODX 1815 from the 1470 entry on May 7th. And you can see I left a ton on the table. We really squeezed like hell going into the close. The reason why I wanted to get flat today was because they have earnings tomorrow, and I want to be out of the trade before earnings. I did not expect this thing to squeeze to 2450 today, but it did. I left a ton on the table, but I'm still happy with the trade, guys. In at 1470, out at 18 and change. Still a solid trade. I pulled out good P&L. Just always remember, put things into perspective. You're not going to catch a stock's entire move, nor should you try, nor is that your job. Your job is to identify high probability setups and then capitalize and profit from the ensuing price action. And if you do so, pat yourself on the back. Don't ever be upset with not making enough money. I made good money on the trade. It's more money than I had before I made the trade. That's my job as a trader. Obviously, do I wish I was still long and selling at 24? Of course I do. But am I mad about it? No. All right. So just to put things into perspective for you guys. And then I traded CREX today. I lost some money on CREX today. So kind of ate into my TVIX profits a little bit. I'll just go over this very quickly with you because I do have to run for, oh shit. Guys, I'm sorry. I do have to run for, I have a one-on-one with a member in literally 1 minute. So I'm just going to show you guys where I bought. I'm not even going to, I'm going to do this very, very quickly but it is a trade that I made. So I just want to show you guys real quick. And then I got to go. So here's what I was looking at on CREX. Okay, was a halt price lined up with 38.2 Fibonacci level, and you had VWAP directly underneath it. So I went ahead and I got long a tier 1 position right here. All right, I added to a tier 2 position as we broke up and out of this flag. I sold 25% of my position right here, and then we pulled back in, failed lunchtime breakout, and I sold out of the position. So I took a loss, but again, the tier trading strategy, which you'll learn in the courses, I sold 25% of my position right here in front of the high in case the high doesn't break. So reducing my risk on the downside, so I end up walking away with a small loss. Then again, I went after CREX one more time. Guys, I'm sorry I'm going through this so quickly, but I do have to go for a one-on-one mentor session with one of my members. And I feel bad because I'm late. So here we have this pennant pattern forms throughout lunch. We break out of it, okay, as we get into the afternoon session around 2:30. I actually get long right here on this break. I sell 25% of my position in front of 6. And then again, another failed breakout. We roll over and I exit the rest of my position right here, taking a loss on the trade. But again, because I'm taking 25% of my position off the table here, way less risk on the backside of that position than I initially was risking on the trade itself. So I lost money on CREX today on those 2 trades, but losing a lot less than I was originally risking entering the trade by taking 25% of my position off the table there for profit. That's the tier trading strategy. It's specifically designed to help you stay in winning trades longer and also keep losing trades small. It did that exactly for me today in CREX. And then I was able to knock it out of the park with those 2 trades on the TVIX. I'll see you guys in chat tomorrow. I got to run later.